All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. Starting off the SP 500, you can see we had a nice squeeze this week. Beautiful short squeeze, actually. Sell off on Monday, couldn't take out the low, and then the squeeze really started on Tuesday before the FOMC, which was Wednesday. And if we look here, on the intraday, we can see, squeeze started Tuesday. Markets gapped up and then sold off into the Fed statement, and it just ended up being kind of a bear trap, and we just squeezed higher. And shorts really just kind of ran for the exits and all kind of had to cover at the same time. This is exactly what I was talking about the last couple of weeks, and I've been saying like this market's too oversold. There's too many bears in it, and I showed you guys the bull bear percentages last week. I showed you the amount of puts that were in the system, and the fact that there was no calls hedging it to the other side just suggested that we were probably going to get a sell the rumor buy the news type incidents out of the FOMC, and that's exactly what happened. Markets just ripping higher here. 4 days in a row green. I thought we would actually pull back. I told my members yesterday, I was like, we probably, we're getting to that 50 moving average. We'll probably pull back on Friday a little bit. We didn't even do that. That just goes to show you how many shorts were in the system and how many of them had to cover into the weekend as the market regained its 50-day moving average. Not on not only the daily, but on the weekly as well. So Andy made a higher high on the weekly. So S&P looking in pretty good shape here. Take a look at the monthly, defending that 20-month moving average. And, the market, has put in a bit of a low here. Now, it's not out of the water just yet or out of the woods just yet, but it has the potential for a good counter trend rally. Let's take a look at the triple Qs. So closing right into that 50-day moving average, never took out this low here, and then take a look at the weekly. Again, defending that 100-day moving average and a huge pop, making it a higher high. So triple Qs, NASDAQ really oversold. A lot of these growth stocks really oversold. Getting above this trend line here, you had kind of a falling wedge pattern, and we broke out of that this week. So triple Qs look good. Also on the monthly, defending that 20-month moving average as well. So market's in decent shape right now, at least in the near term. We put in a lot of that risk premium is now priced in. A lot of the rate hike stuff has been priced in, and that's why you're seeing a squeeze. And it comes down, to risk management. And I tell my members all the time, you have to protect yourself. So if you were short, let's say you were shorting this whole way down, well, congratulations, you did a good job, but you got to take profits off the table down here. You got to start peeling back risk, start trimming your position, or start hedging with calls at the very least, hedge with a leveraged long ETF or something, because this is what happens when you don't. And, greed works both, on both sides. It works on the top. Bulls get greedy and then they get slaughtered. And then bears get greedy and they get slaughtered. You gotta manage risk. You gotta take profits, and you gotta be smart about it. And this is indicative of what happens when you don't. But in any case, market had a nice pop this week. We'll see what we get out here moving into next week. I do think we are a little overbought here in the short term, but so possibly due for a pullback. But I still think there's a little bit of upside potential in the market. Let's look at the Russell. So Russell 2000 having a nice week as well. We talked about how it was a leading indicator. The fact that you hadn't made new lows recently and it was making higher lows was probably a bullish sign. Remember the Russell 2000 tends to represent risk as it is a small cap index. So it is a leading indicator. Now, I don't think it gets much through 210. You got up to 207.27 by the close on Friday. I don't know if it gets much farther than 210 in the near term. It is into some resistance. This is where you broke down. So that is going to be, their sellers will come in there. But it had a nice move off the lows. And, again, just a really nice move for the market in general. Same thing with the Dow here. Getting back above that 50-day moving average there. This weekly chart looks pretty good as well, as does the monthly. And again, the month hasn't closed out yet. We're not, we still have about 2 weeks left in the month of March, but, a nice monthly candle there on, pretty much all of the major indices there. All right, so let's look at a few sectors. So start off the semiconductors. Again, this kind of falling wedge pattern reflective of the triple Qs. So move down and then lower lows, lower highs. This is what happens when you get oversold. You get this falling type wedge here, and then we get a breakout of that. Again, semis coming into some resistance here, but a nice move off the lows. And if they, if they put in a little consolidation, they could possibly get another bid up into the next couple of weeks. But regardless, a nice move off the lows there. Same thing with the IGV, cloud software. Again, falling wedge pattern. You see this, we see this pattern pretty much across the board right now in the markets. Got above that, hit the 50-day moving average, and came way off the lows there. Inside attack, we can look at Apple here. They broke it down below its 200-day moving average, and that ended up being kind of a bear trap as we ripped higher there. So Apple having a nice move off the lows, recapturing those moving averages. Also tested the 50-week moving average, and that passed pretty well. And you had kind of an engulfing candle here on the weekly. So a good look there for Apple. Again, nothing really wrong there when you see that. Tesla also having this kind of downsloping trend line here that it broke out of. Now you kind of have this one on the top side, which coincides with that 50-day moving average. So again, a lot of these stocks coming into some resistance here. Google was following this wedge pattern here this week, broke out of that, but again, 200-day above that. So a lot of things getting a little overbought into some resistance. So due for a pullback, but outside of that, don't really see anything wrong at the moment. A lot of the beaten down growth stocks, the PayPals, the Zooms, Palantir, Square, Facebook, these stocks here that were just so beaten down. I mean, Facebook was over 50% down from its all-time high. I mean, this is a big company. This isn't a mid-cap company. These things were just really oversold. Too many puts being bought on. And by the way, Zoom, one of these companies, we just took 15.5% on a swing trade on this one. And that's just what happens. You get so oversold that you can get a huge move off the lows. I mean, this thing went from 95 to 116 in 4 days. So these stocks that get so beaten down, I call it like a rubber band kind of theory. The farther you stretch it, the farther it's going to go. So these beaten down growth plays are just getting major snapback rallies. Take a look at like Roblox, Affirm, so big moves off the lows, and these stocks finally getting some relief here. And speaking of oversold names, how about the Chinese ADRs here? FXI, we talked about these last week. China's government finally turned dovish on stocks, and look what happened here. FXI, amazing reversal here on the weekly time frame. Alibaba, same deal. I was looking for this to get a little bit closer to 65, but it's still into a good support area. Anyways, you can see, take a look at the volume there on the monthly. That is a major bottom there on Alibaba. Baidu, going all the way from almost 100 all the way back up to 149. Pinduoduo, this one got close to this kind of all-time low here. This consolidation period, huge pop off the lows there. Tencent, this one actually I think I told you guys last week it was going to about 43 and possibly down to 41. And we got there. We got all the way down to 39 or 37.92 actually, and got that 100-month moving average, and huge move off the lows there. I thought these things had a little bit lower to go, and I knew that they were going to dump out, but I didn't think they were going to rip back this quickly. But we have a government that's the type of government that they are. They can cause these types of moves because it's basically a command economy. So you get news that the government is going to reduce regulation and so on and so forth. Obviously, that changes the regulatory fears, and that makes these stocks look a lot more attractive to foreign investment. And I think that's what China is trying to do right now. Anyways, a couple of other areas stalled out. Some commodities pulled back a little bit. Mosaic stalled out a little bit. Potash stock. Intrepid did pull back pretty sharply off the highs, but getting a bounce off the 20 moving average. If we look over at, we'll pull up TradingView here. So aluminum pulling way back off the highs and continuing kind of to chop this week. Wheat came down very sharply, and that's continuing to kind of base in this area. Nickel is now only up 50% in the last 2 weeks instead of 400%. Pretty big moves there. Uranium still held up really well though. If we take a look at, let's take a look at Camco. This one still has upside near term to 29, and had a little sell off earlier in the week, but got a nice bounce here. I still like this one up to 29. URNM holding up okay, even though had a bit of a pullback here. These stocks are holding up all right for the most part. Crude continuing to slide a little bit, but bounced back on Thursday. I think this probably gets up to 110, 115 sometime next week, and then we'll really look to see if it starts to make a lower high. If it does that, then it could set up to possibly make a lower low if it makes a run at 95 again. I think right now 95 is your big support level. After that, 85, if you get through that, this would be a huge level. But we'll see what happens. Again, a lot of the geopolitical risk premium is priced in. So I think the bigger moves are kind of behind us rather than ahead of us. You know, we had a huge panic move in commodities, and now they're starting to come back in, and things are starting to get priced in and calm down a bit. Doesn't mean that they're going to crash, but you're not seeing these. You're seeing the panic spike sort of kind of cool off a little bit, so to say. Same thing with XLE here. Pulled back off the high, still holding trend though, holding the 20 moving average. But you know, again, you want to look to see if it makes a lower high. If it makes a lower high, you know, then maybe it comes down and tests 70 again. And if it gets through that, you know, then you got down to 65 in this moving average here. So same thing, XOP, OIH, all kind of the same chart really. OIH coming right into that 20 moving average. But yeah, what we're looking for in energy and commodities in general now is they're going to bounce, but do they make lower highs? That's going to be your indicator. If they make higher highs, then it could tell us that maybe things are starting to bubble up again, and there could be something lurking on the horizon as far as geopolitical risk. Anyways, net gas here, kind of having a quiet week, all things considered. Got a nice bounce here, and then maybe starting to go sideways. If this chops a little bit, this can attack this pivot high and possibly get through that. The weekly chart's not too bad. I would like to see it go sideways a little bit longer. And if it can stabilize a bit, then it can actually attack this 550 area and try to actually sustain above that. But right now you got to contend with this red bar high. And obviously this major pivot high is going to be resistance. But outside of that, nothing wrong really with the chart on nat gas right now. Dollar index, it did back off a little bit, just like a lot of things here, but still holding trend. It got up to that 99 handle and had a nice reversal this week. So a little bit of a pullback. It got pretty extended. You know, it was overbought and it was into this big resistance zone here. So dollar index, no surprise to see it coming in a little bit. Gold here, continue to kind of pull back and chop around. It is holding these pivots here. Don't see anything too wrong with it. Again, you want to watch for lower highs. If it makes a lower high, then it can probably come back in and correct a little bit lower. By the way, if you're interested, I did a whole video earlier this week on long-term projections on gold and oil a little bit and the stock market, but mainly on gold. And it was a really good video. I got a lot of engagement out of it. I think you're definitely going to like it if you're precious metals fanatic, like most of us are. But yeah, go check that out if you're interested. But GDX here, coming back in, holding this 20 moving average, getting a nice bid. Well, overall, the gold market, right now it's very tied to fear. So if that fear sort of subsides and we get the geopolitical risk premium being priced in more and we don't get any more major news, the precious metals and the dollar index and oil will kind of cool off for a little while. That doesn't mean that they're going to cool off forever though. There's still a lot of problems in the market, but in the near term, we can expect more backing and filling and maybe a bit more of a corrective move if things sort of stabilize here. Silver, same deal, right? So you had this big kind of spike up here and then you pulled back. You got pivots in here. So it's holding that for now, but we'll have to see what we get. We'll see if we get a better pattern here. But as of right now, it's just, went up sharply, came down sharply, and now it's trying to stabilize. I wouldn't do anything with it at the moment. Same thing with platinum. Platinum and palladium came down really hard this week. A lot of that had to do with the China lockdown talk. So we really cut right through this bull base here, which is not a good sign. And the platinum and palladium markets are very thin. So you can get these pretty big moves, but I don't like how it lost to this kind of bull base here. This was a good base and it really just cut through it like it was nothing. Palladium, look at the volatility here. Huge move up to 3,400 and then all the way back down to just under 2,400. So big moves. A lot of these commodities are starting to come in. Copper came in pretty sharply, but got a nice bid off of this level here. I told, actually I gave this out in the video. I said, this is going to be a good area for a bounce on copper. And, it turned out to be a good area. So got a nice move, closed at 471. One thing I'll say about copper is this weekly actually held up okay. I didn't like that reversal we got last week, but this wasn't a bad recovery. You tested this 20 moving average and kind of back tested this breakout area and you got a pretty good bid. So we'll see what it does here next week, but that wasn't a terrible retrace on copper. Again, made it to do some backing and filling, but overall a pretty decent bounce there for the copper market. Anyways, all right, let's flip over to TradingView again. We'll talk about the coins here. So Bitcoin, again, we talked about this really pretty much every week now, But crypto has been kind of a leading indicator, and that it's one of the reasons why I've been kind of saying like, look, the market's probably close to some type of a bottom here. We got that this week. But crypto's been holding up. It held this green bar low here. Bitcoin did, made higher lows, and you're getting a nice little bit here on Friday night. We do have a nice wedge pattern. We're going to continue to monitor that. If you get through that, then your upside is up to 48,000. I don't think it gets through that though. I still think that weekly chart is not in the best shape. I do like this micro kind of bullish inside bar, but it's inside of a bigger bearish inside bar. So keep that on your radar. Ethereum, same thing. You got the micro bullish pattern and a bigger bear pattern outside of that. However, the daily on Ether is not bad. You did have a little bit of a wedge breakout. So in the short term, that probably clears you up to about 3,300. So nice move there for crypto. It's holding up okay. And it's been a really excellent leading indicator. Guys, pay attention to the crypto market because it can be an indicator of risk on. And in these types of environments, you need all the help you can get. And the market's, the market always talks to you. So if you see risk assets, you see the Russell starting to bid, if you see Tesla starting to bid, if you see crypto bidding, it's probably telling you that the market is close to putting in a low or getting ready to put in a bid itself. Anyways, let's wrap it up here. Overall, a pullback is likely in the market. We're into that 200 moving average. We're kind of overbought short term. And I think that if we get a pullback and we, pass a back test of this 430 area, 432 area on the spiders, we can make another little leg up. That doesn't mean that the market's out of the woods forever. And I want to explain to you a scenario here. So this is important. If we get any sort of peace deal out of Russia and Ukraine, and it doesn't matter who wins, right? I don't care who wins. The market doesn't care who wins. As long as it has certainty, that the market will gap up probably about 2.5%, 3% the next day. It'll gap up, and that will likely be a selling opportunity. And I'll explain why. If we get a peace deal, that immediately gives the Fed clearance to proceed with further rate hikes. So you'll get that kind of sugar high algo HFT pop on, peace talk. And then the real market, the smart money will come in and say, we need to look forward to rate hikes because that's what the Fed is now have the carte blanche to do essentially. And the market will sell off. That is my sort of thesis. Now, I don't know if we're going to get any peace talks or any peace deal, but if it does happen, definitely keep that scenario in mind because the market will immediately look to the Fed afterwards, as it always does. So we had a sell the rumor, buy the news move this week. Ultimately, markets are overbought, but if they pull back, they could make an advance here. And I don't know if they get much through 450 or 455 in the near term on the spiders, but again, we'll just take it one day, 1 week at a time here, and we'll see what we get out here next week. Anyways, guys, take care. Come find Jason on Patreon. Come find me on carnivoretrades.com if you're interested in swing trading. Give the video a like, comment, subscribe. Come check me out on my YouTube channel, and I will talk to you guys all next week.